Hey, and you guys are taking a look at McDonald's with us. What does your guys' data show on McDonald's? Talk about a stock that's basically charting all-time highs every day, right?
Absolutely, yeah. McDonald's is on a tear. I think it's closing in on 200. I don't know if they're going to get there. They've got earnings coming up, so we'll see. But yeah, it's been uptrending very hard over the last couple of years. And what's interesting about that is it's not doing that because of increased revenue. You know, when you look at our purchase intent data, which measures the number of people talking about going to McDonald's, usually through the drive-through, what you'll see is that it's been pretty flat or actually down a little bit over the last several years. And while the stock has been surging higher. Now, what's really interesting is that purchase intent data lines up with revenue really well while the stock is kind of ignoring that. And what's happening is revenue is decreasing. If you look back over the last four years or so, revenue was 25 billion, 24, 23, 21. It's decreasing about 16% over that time. Meanwhile, profit is going up about 31%. So they're cutting costs and they're getting more efficient. Plus, they're loading up on debt, doing a share buybacks and dividends. So they're kind of buying time there, looking for a big turnaround. And what our data is showing is that they're not getting more people in the door. They may be getting more money out of each person. They may be cutting expenses to increase revenue. But as far as top line revenue, it's not been growing and it hasn't been for years. And our data is showing that is going to continue.
Landon, I see something on your chart that always gets our attention, and that is two lines going in different directions, right? You've got the stock price going up, but not the purchase intent. So is that something that, you guys give extra attention to when you get a chart like this?
We do, and we always want to look at why. And so that's why I pointed out the fact that our purchase intent lines up really well with revenue. And so this has not been a surprise. This won't be a surprise to the market. But the fact that they are, reducing the number of shares by about 20% over the last 4 years, that forces the price higher just by default. And they're giving away dividends. They're cutting expenses. So I think that the market would love to see increased revenue because they haven't for 4 or 5 years now. Right now, what they're banking on is just that continued efficiency and getting higher income per customer. But again, we're not seeing that increased revenue. And I think eventually that's going to lead to a breaking point. McDonald's used to be sort of the default quick option. If you want to hit the drive-through really quick, or if you wanted quick food, it was either that or delivered pizza. But that's 10 or 15 years ago. Now you've got a lot of different ways to get food delivered to you. You've got a lot of different competition for McDonald's. And so I don't think that you're going to see the increased revenue that they really need to see, and that's what our data is showing. So the divergence that you're talking about, yes, we do always hone in on that, but I don't think this one's going to be a surprise to the market. The market would love to see increased revenue. I don't think they're going to get that, but that's not what's been forcing the price higher.
Okay, and also, Landon, too, as you mentioned, that they're cutting costs is how they're really generating earnings. There's a limit to how far you can cut those costs. But Jenny, you're seeing some stuff on Twitter also that's kind of more on the technical side, am I right?
A little bit, yes. And I also saw kind of what Landon just mentioned, that we've seen this turnaround story since the new CEO in 2015. They want now something of 95% of their stores to be franchised, and I think this could explain a lot of the decreased revenue because they're becoming such a franchisee. But the street really likes this, and Twitter really likes this. I mean, people don't have a problem with so many franchises now with McDonald's, so it just seems like this is a way to continue their success. And I mean, social media, McDonald's is always a fun one because people love to talk about their McDonald's orders. People like to talk about the different things they get at McDonald's, whether it's healthy, unhealthy. I mean, I love to talk about food, so social media is fun. But our first tweet says, McDonald's is one I've been liking for a while now. Ended Friday with a nice hammer to the upside. Earnings are on Tuesday, so I can definitely see the stock breaking the 198.6 high before announcing earnings. Swing trading on this one will be ideal. So something I'm seeing really across the board is valuation. People have a lot of question about the attractiveness of McDonald's valuation. What do you make of that, Kevin?
Here's what I think. And, it's so funny that I come at this from a such different perspective than it's like the Happy Meal generation and the Big Mac generation clashing here on the show. But I think a couple things. I think there's only so much that the street will give McDonald's in terms of EPS growth if they don't have the revenue growth. That'll start to be a red flag. The other thing that pops up is what we talked about with Ben, is that $200 level and how much resistance will get hit above, right around that $200 level, and how much just natural selling can be brought in. So two things are giving me a little pause here. And Landon's chart is telling me be careful in terms of You know, revenues going down doesn't help me like McDonald's stock, even if it's the earnings per share because of expenses. That doesn't make me like McDonald's stock anymore.
Landon, I see you nodding. Is there something you want to add to that?
Yeah, I would agree with everything that Kevin said. In addition, the fact that they've been increasing the price somewhat artificially by doing buybacks and loading up on debt, I think that buys them time, but that clock is going to run out, and they really need to increase revenues. And Alex, like you said, you can only cut expenses so far. So eventually something's going to have to happen with revenues to the upside for this to be a true turnaround story, and our data is showing that's not going to happen this quarter.
And Kevin, you mentioned EPS. I mean, they're only estimating a cent over EPS last year, so they're actually not growing much in EPS either, and I think that's reflective of the lack of revenue growth.
Right, but even if we did see that, without the revenue growth to carry that, people are going to be looking at it and going, how are they making their money? You know, guess what? I'll give you this. I believe that a flat earnings per share and the stock sells off.
Well, and the expectations are going to be so high with the stock at all-time highs
Yes.
also. But how does this tie into your second tweet, Jenny?
Yes, so our next tweet says, every time I pass McDonald's and see the lines, I tell myself I should own some. I don't yet, but maybe soon. So, Landon, question for you. We talk about this healthy food movement all of the time. I mean, we talk about it with Frito-Lay, all these different companies. Have you seen that impacting McDonald's at all?
Absolutely, yeah. So we've got data that shows that the country is beginning, or at least accelerating, into a massive healthy movement. And obviously that's bad for McDonald's. I mean, I think they've done a great job over the last 10 years or so of getting a little bit more healthy, but when you boil it down to what they're serving, overall it's very high calorie content. It's just not a healthy option. So that's going to be bad for McDonald's over the long term. They do have obviously a ton of distribution, a ton of stores. So if they were able to take on that challenge and pull through, I think they could be, that could be the turnaround story. But for now, it's just going to hurt them in a big way.
I can say that in my 30s and 40s, 90% of my McDonald's purchases was when I was buying Happy Meals for the back seat and going, oh, fine, throw a number 2 on there with mine, but just to save time. It was almost convenience, because you were going for Happy Meals anyway, and every young kid will still choose McDonald's, and the parents will be just give in and say, oh, fine, throw a quarter pounder with cheese on there for me. So how much, Landon, you have young children now, how much of that is your life?
I tell you what, I bet my family's gone to McDonald's maybe once in the last 12 months. We just pretty much wrote it off. Our kids know that we go other places for food. We go to Chick-fil-A. You can get through the drive-through in 45 seconds, even if there's 100 cars in the drive-through. Whereas McDonald's, it's going to take you 10 minutes and your order's going to be wrong. Plus, it's not healthy. So no, we don't go to McDonald's.
There it is.
I wish I could say the same.